Hey everyone. So first a disclaimer: this is not financial advice, and this is for informational and educational purposes only. I wanted to go over a trade of zero DTE options, which potentially can give you 2000% return in a day. Again, the most important point is potentially. So we will see how it was possible. Let me write what we are talking about. We are going to talk about uh, zero DTE. So zero DTE is 0 days to expiration options, and for most of the index ETFs like QQQ, SPY, they are very active and very liquid and have a low beta spread. Okay, so what we'll talk about is the QQQ zero DTE option, and today is March 26th, and I have some strategy signals that is free for everyone in the Telegram channel, and I wanted to show that. So let's go over first the signals that I have. So I have the signals for NQ. Scale it down. Okay. So the NQ signal in the it came at 8:25 a.m. Central Time or 9:25 a.m. Central Time. This is the NQ signal, and so basically I could go short on this NQ trade, but this signal is based on NQ, and NQ is the futures for Nasdaq 100. So either you can trade NQ, or you can trade MNQ, or you can trade ETFs like QQQ, or using the leverage ETFs like SQQQ. And one other choice that we have is to trade the zero DTE options on QQQ. So let's look at what QQQ did. So QQQ started at, so this is at in the morning. It started at 9:30. So now this is Eastern time. It started at 492, and then it moved up a little bit, and it kept on going down until 482, and then it closed around 484. And a good way to pick options is to understand your risk, because when you're playing with zero DTE options, most people have kind of a risk management strategy where they think they might lose 50% or 100% of their investment in this one. And we got this NQ future sell signal just at the opening of the market at 9:30. So how we can play with this in options? Let me open. So this is my Interactive Brokers account, and if you see, this is March 26th. It is today's expiry, 488 put. So 488 put was a little bit further. It was, I think, 492. So when it was trading at 492, so this is out of the money, zero DTE options, and market could have rallied, and that if you were holding that, you would have lost all your money. But it didn't rally. We got a sell signal, and it went down, and it could have gone down and just chop around here and didn't go down that much. But I wanted to show you the potential of zero DTE options. So the risk is 100%. But what's the potential upside? That's unlimited, right? So if you see zero DTE options, the lowest price was 0.23, and the maximum price was 5.15. So they went from 0.23 at one point to 5.15. And just for the ease of calculation, let's assume that you, instead of 0.23, let's assume you bought it at 0.25, and they went to 5.25. That's like a 2000% return in one day. That's like amazing return, and no one can catch that. But let's assume instead of that, maybe you bought it at 0.5. Instead of 0.25, you bought it at 0.5. And you had enough time to, because it was trading under 0.5 until for 20 minutes. So let's say you bought the options for 0.5 or 50 cents, and 50 cents for basically when you buy options, it is worth 100 shares. So basically when I say 50 cents, what is happening is let me see. Let me show you here. Okay, 50 cents option is 500 sorry, $50. So one option is $50, and let's say you buy 100 options, and that means for your investment is $5,000. Now this is just hypothetical. Your investment is $5,000, and let's say you buy at 0.5, and you didn't capture the full move, but you captured most of the move at $4. Okay, so $4 option, when you sell, how much will you make? For $4 times 100, that's the cost of one options time, and you bought 100 options, right? So that's like 40K. So basically your $5,000 became 40K, and whatever people will buy depend on their risk tolerance, their whole account, and of course this strategy should be, you should know that you can lose all your money, right? So if you're buying for $500, then it will become $4,000. If you're buying for $1,000, I'm just showing you the scale of which money can be made in 0 DTE options, and like this is amazing, because downside is you lose all your money, but upside is not just 2x, not just 3x. It's like it is 8x or 20x. So that's why it is a very liquid market. So if you look at the volume, there was in this 5-minute bar, there were 7.5 thousand options exchange hands. Again, 7.5 thousand, and it was pretty liquid, and then the liquidity died down, but still people were still trading it. So again, so if you want to get free signals, you can join the Telegram channel. It's free, and you'll get a lot of signals, especially in a choppy market. You will see multiple signals here: buy and sell. And in trending markets, whenever there's a big move, whenever this big move happened from here to here, we were in sell mode, and we captured the whole move. And sorry, this is QQQ. I don't have signals on 5-minute QQQ. I have signals on NQ, and let's look at here. Yeah, so the whole move of 1.98% down. So NQ went down 1.98% from the open to the lowest point here, and similarly QQQ, because NQ and QQQ are based on the same. So let's measure the move. It should be approximately 1.98. Yeah, so 1.9. And NQ and QQQ, they are based on the same index of Nasdaq 100. So that's what I'm saying, is that you can use NQ signals for either options on NQ or options on QQQ, or leverage ETFs, or just regular ETF, or actual futures of NQ. And the returns, 2000 return is possible, 800 return was possible today, but even if you capture like a smaller chunk, maybe like 200% or 300% return, that's really good money. So this is especially for people who have smaller accounts. Just wanted to show you the leverage of options. It works both ways. Thank you.